That's the craziest thing I ever heard.
What's going on, gang? How we doing? What is happening? Pattern watchers, what's good? Got New Zealand in the house. What's happening? Who we got in here? Who we got? Sack Trades, what's going on, bro? John Doe, bang, bang. What's happening? Good evening, PC Shed. What's good? How you doing, my friend? Atai, how you doing, bro? Where you been? There's a lot of people coming back again. Day's been okay, to be honest with you guys. Missed out on a mad move by dollar yen, but that's fine. We'll have a conversation about that at some other time anyway. But yeah, very interesting behavior. So let's just move all this stuff right about now. Okay. Right. Getting all things sorted out for you. How are we this evening anyway, guys? Who we got else? Who else? Who we got else? My God. Losing it, man. Losing it tonight, guys. Who we got in here? System Hack, you making those songs, man. Tino, if you see this, you make BitBoy want to choke on a cheeseburger. Why would I want to make him choke on a cheeseburger, man? That's so unfortunate. It's all good, man. Pattern watchers will still keep watching patterns, man. It's all good. Getting ready to short with Ether 2.0 coming out. Canada, what's happening? All right, then. I'm good, guys. I'm good, man. I'm good. Dynamis, thank you so much, bro. No problem. Can we go down? Well, this is the next conversation that we're going to have, guys. All right? Mr. Gypsy, thank you very much, man. The frog's bollocks. I'm new around here. What's this all about? Supply and demand. Supply and demand. What a funny story, ladies and gentlemen. Okay, then. Well, let's get to it. For anybody new to the channel and for my existing pattern watchers, welcome to the Traders Reality channel. My name is Tino. Let's have a conversation, guys. Let's flip straight over to this bad boy. Now, some of you may or may not have been aware, okay, today's live that we had at 2 p.m. during the New York Open, we were conversating about this previous pool of liquidity that Bitcoin was going to come back to. I do believe that is a projection well served. How many of you managed to capitalize on this move to the upside? Type 1. I want to see this. Did anybody take this trade from earlier on? Anybody? I see some ones. Of course, it's okay if you didn't. No problem. What comes up must come down. Goes up, comes down. All right? All right, then, cool. 2 o'clock. No worries if you're sleeping. It's all good. This is why I'm doing the streams, 2 streams a day, just to see, to effectively accommodate to those who ain't going to be able to get on the stream tonight. All right? So, here we go. Well, you know what? Was it clearly going to go to 40k? Well, we didn't know that when price was down here earlier on. That's the thing, you see. All right. We didn't know it was going to go back to 40k. We had the 800 EMA as a resistance point, and you had the 200 EMA as a resistance point on the 15-minute time frame. All right. But we understood that that was the nearest point of liquidity that the market makers could send price back to, because let's be honest, the general consensus of price right now was Bitcoin was dropping. All right. How many shorts do you think were opened whilst price was dropping? Yeah. Now, this is something that we need to understand as well. Excuse me. If we flip over to the 1 hour time frame, we're in a cyclical move to the downside. Okay. We've already had the move to the upside. We now need to see a little bit of a retrace. Bitcoin come back down to this area of liquidity right here, fulfilled that, and it's moved straight away. The inverted head and shoulders has formed perfectly down here. If you look closely as well, you will also see stopping volume candle right there. Okay, let me bring you MT4 just to make things a little bit clearer for you. All right. Now remember, guys, on the 4-hour time frame, there is a bigger pattern. All right, if we zoom out, we can see clearly the bigger time frame, what pattern they are currently trying to come out from. And you can see it right there. That big W formation right there, ladies and gentlemen. This is what we're waiting for. Look closer and you can see the previous pools of liquidity right there, which sitting around the 41,000 mark. Now listen, we're not out the woods just yet. Until Bitcoin breaks above this area right here, there are no cigars for us. Okay? There are no cigars. And yes, the shorts did get smoked. That's the sad truth about it. They did get smoked because they were led to believe that Bitcoin was going to drop. This was a head and shoulders formation, and then it drops down. How many people also traded the golden cross or the death cross? Look at the 1 hour time frame and you'll see for yourself. Okay? So many people traded across. That's why price spiked lower earlier on today. The cross that was initiated brought price down. Retail traders saw that cross and thought, okay, that's the death cross. Initiation of shorts. Market maker sends price down to the lows and snaps it all the way back up. All right. Now, this is something you've got to try and consider as well. Was this the clue right here? Was this the clue by the market maker that they were going to move price higher? How could we know? Well, we will never know exactly where they're going to send price, but we have to build as many confluences as we can, okay, to determine that. Now, just because Bitcoin has moved up higher doesn't mean that it's going to continue higher. All right, we always have to factor in the idea of what could happen next. Okay, how many of you, all right, how many of you think that Bitcoin will actually break above the 42k mark? How many think Bitcoin will break 42? That's the key thing. I see the future. Some of you believe it. Nope. Okay. Two. Okay. Don't know. Fair enough, Stein. Okay. Seen twos. Exactly, Hursthorn. When is the? Like, when? All right? This is what we need to try and understand. Okay? Now, let's make the assumption. All right? They come back to this pool of liquidity and broke straight through it. Jump down to the smaller time frame, especially the 30-minute. Are we going to see what I want to see here? It's not on there. Perpetual might not show it. Where is it? 39,000 mark right there on the chart, ladies and gentlemen. The novelty of the whole numbers right there. Okay, you can see that. The green area, 39,000. Notable volume breaks up above that zone. Okay, now this is what may happen next. They move price above the 39,000 zone to get out of this area of consolidation. Just look at the vector candles. Red, and red again. These are red vectors. They are buying in this area, buying at the lowest possible point, inducing the retail trader to believe that price is going to go lower. The green stopping volume candle that appeared right here was effectively the clue. It hit yesterday's low, broke down because there are traders that had gone short on that principle. All right. First person that said your name correctly. Well, it says how it's spelt, isn't it? That's Stein. Is that not how it's meant to be said? Yeah? It's like psychology. You don't say psychology with a P now, do you? It's like you don't spell seaside with a C. Although I did do that to someone once, you know. Someone was asking me to spell my name phonetically. And I said C for seaside. And they were like, yeah. I was like, you didn't hear that. C for seaside. And they're like, yeah, it's spelt with a C. I was like, bro, come on, man. You must be having me on, bruv. You know, go have a cup of coffee and shake your head a little bit, man. I said C for seaside, you know. But hey, that's that's another story, man. That is another story. But anyway, let's get back to it. You're here because you want to understand where Bitcoin is going to go next. Okay? Well, look. We need to consider. Let's go back to the cycles. All right? Bring the 1 hour time frame up and let's just go back up here. Lesson begins. All right. This is a weekly cycle. All right. Let's just get rid of these red marks here. And I'm going to keep going back to this because this is a pattern that needs to be trained in your eyes' mind. You need to be visualizing this pattern continuously. Okay. Right. If we are here, okay, price has dropped, which is right there. It's come down, which is right there. And now it's coming up. Is this rise level 1? Yeah? Yeah, mind's eye. Yeah, one of those ones. Listen, the levels are hard. Hurstthorns, listen, the levels are hard, but listen, these are the most difficult things to establish, okay? Because what constitutes a level? Well, the basis of the level is this. The more consolidation you see at a moving average, all right? The longer the level is, the more conviction you're going to see when they move away from that point. Because remember, look at this. If we go back to this point in the chart, all right? Right, let's start from the beginning. There was the W formation, okay? Price rose up. The one rule for a level, okay, is price needs to come back down to the 50 EMA. That's what we need to see. It comes back towards the 50 EMA. It touches it right there. Look, you can see closely that it hits the 50 EMA right there. That is level 1. And it is level 1. Level 1 effectively starts here. All right, so let me mark it off. Level 1 starts there. Now, the first level starts when a high is achieved and price pulls away from it. Okay? And that's what's happened here. So from the peak formation, we know that when price forms a pattern at the lows below a moving average, okay, and it moves away from that point, once it hits the first high, that is the start of level 1. So when it goes down and pulls back towards a 50 EMA, that is the start of level 2. Okay? Because what it needs to do is it needs to break away from the previous high, okay, and make it clear that their intention is to go higher by breaking and trading higher away from this zone. Because they had accumulated orders in and around this zone. They took out stops, liquidation points, came back to the 50, and they moved away from that point. So now we've got a rise level 2. Well, this level 2 was sort of an extended rise. Because look, it came up, it didn't go back to the 50, and then it continued on from that point, kept on going, then it spiked the high, and then it came back down. Now, the concept would say that this is the end of level 2, and we're going into a level 3 rise. Okay, so if you had the chart like this, you would be saying to yourself, well, price has now come down to the 50 EMA. That's correct. We need it to come down to the 50 to determine a level, all right? It now needs to trade away from that point. So what happens? Price then starts to rise. It starts to go up. It spikes up. Okay. It takes out the previous high. So if it takes out the previous high, does that mean that we've now achieved level 3? So then traders now, when they see this side of the chart, they're going to start thinking, okay, this looks like a head and shoulders pattern. So there's the head. Sorry, there's the shoulder. This is the head. I'm now waiting for the right shoulder. Then they wait and they wait and they wait and they wait, and they can see that that is the shoulder right there. There's the shoulder. So traders will then start to go short. Okay? And then they start going short. They see price not really doing much. It goes up again and it comes back down. And they're waiting. Bang. They've gone short. Okay? And they've committed to those shorts. All right? Because they believe that this is the head and shoulders. All right? Because they think that this rise up, okay, was the level 2. And this price coming down was the start of level 3. So when it breaks up above that zone right there, you've got yourself level 3 confirmation, pattern up above the 50 EMA. We're now going down. Market maker convinces the retail trader that that is what is happening. But then what happens? Price consolidates and moves back up. So what happens in this instance? You say to yourself, hold on a second. Weren't we at level 3 when price broke up above here? Well, what's the criteria for a level? Price needs to break out clearly. It needs to clear the zone. Where was the confirmation candle? There was none. It came straight back into the range. So the one fundamental rule that you need to keep in your mind is this. In order for a level to be confirmed, price has to break completely away from that zone. If it doesn't break away from that zone but comes back into that zone, you are still in the same level. So now let's zoom out a little bit. If this was not a valid level, okay, or true consolidation, what is the true consolidation? Right here. Because they brought price back down way into the level that they were consolidating from. So in other words, they had been previously adding more and more orders in this zone, but it was above this area here. So as long as it stays within this area here, level 2 is still intact. So we are expecting another move to the upside. Then it happens. Clean break to the upside. What do you get? You get the clean move. Look at the difference between this point here, okay, and look at the difference between that point in the rise and the chart right there. Can you see? There's not that much conviction there, is there? But on the green vector candle, to the conventional eye of the retail trader, he sees that. He goes long because it's a green candlestick. Remember that. A green candlestick. The way traders see things on a normal day-to-day basis, I'll give you an example, is like this. Look, if I bring up the chart, 90% of traders, without adding colors and all of that stuff on the charts themselves, see a chart like this. All right, let me show you. Let me zoom in. You change this, change the colors, bar up green. All right, so blue candle, that will be a green one. And then bear candle would be red, okay? So if I go back in the chart and show you this candlestick right here, you're going to say to me, hold on, that's a green candlestick. Yep, I favor higher prices. Well, it was on the 15-minute time frame. And let me just show you right there. No, it was on the hourly, sorry. So they see that green candlestick, but they don't know that's a vector candlestick, which is why they get thrown off with the next candle, because the next candle opens up and spikes up, solidifies the retail trader's belief that price is going to continue higher, but then he spikes back down again. Okay? Look at how many traders went long on this green candlestick. This is just normal charts, normal candlesticks that 90% of traders come to the charts with. You got traders that make their candlesticks different variations of colors, which can really distort the mind. How are you going to understand what that candlestick is? You know, if you think it's going up and it's green, you think positive, great, make your entry. That's how the retail trader sees it. Okay? Different story when you look at the vector candles. You're getting a completely different image. So, if price comes away from the previous high of a level but doesn't break out clearly, you know you're going to be seeing price come back down into that range and it's still going to be in that level. So, price does make a clean break up to the upside. It makes the first high, pulls back to the 50 EMA to trap the retail trader on the belief that buying the dip is where you need to be. They buy the dip, notable volume, push one more time, and then they break down. They've achieved their move to the upside. Now they need to see a bit of consolidation, which then takes us now to this point here. We've had the M formation, price drops down. We've had a consolidation. Usually you'll see a pattern form in this area, and price can do one of two things. It can continue back up, and it can start to destabilize in this zone, and then drop to confirm the next level down to the downside. This is where we are right now, ladies and gentlemen. We've seen a little pattern right here. As you can see, W formation or variation of a inverted head and shoulders. Look, 1, 2, 3, 4. Okay. Now there's one or two things that can happen. All right. One of two things. Now, if you've watched back in the previous streams, ladies and gentlemen, you'll understand. Okay. Every time when Bitcoin starts to rise, or Ethereum, and I'm going to look at Ethereum in a sec. We're going to have a look at the altcoins as well and see who's been moving. Okay. Every time Bitcoin makes a high and forms an M pattern, okay, and pulls back, it always seems to form a W formation or an inverted head and shoulders, okay, and then it makes a massive run back up again. Okay. It's like when they want to do a full cycle to the downside, all right, they have to actually make a massive move to the upside first. So if you look back on the charts, you will see on the higher time frame, all right, Bitcoin is coming back up from a massive move to the downside, all right? Massive move to the downside. Now, usually this is what we see. There is a cycle that happens. We usually see 2 weeks up, 1 week down, okay? And sometimes you see 2 weeks down, 1 week up, right? That's usually the cycle that actually takes place, all right? Bitcoin is closing above the 4-hour 50 EMA. That's huge, ladies and gentlemen. Huge. If anything, it's actually now flat. So it's all systems go. But what systems go? What direction do we take? Well, look at where the previous pools of liquidity are. We've got massive pools right here. Now, let's assume that from this point, they do actually continue higher. Now, if you decide to make any entries based on the understanding that Bitcoin may go higher, you're going to come to a few resistance points. Because once they hit a pool of liquidity, they usually pull it back again. Because remember, they've trapped the retail trader in the belief that price is going to go down. Because previously they got them to believe that price was going up. So all the stops and all the liquidation points are within this vector candle. Which is why price comes all the way back down to recover it. Okay? It always comes back and recovers it because the liquidity that they need to open their trades on the downside and see a profit is taken from the liquidation points that the market, that the retail trader sets up in his positions. Whilst they're taking out all of those liquidation points, people are starting to feel like they're missing out on a move to the downside. They're now running on tilt. They are absolutely upset about what's happened to their positions. So they then want to get involved on the move to the downside. Market maker now starts to buy as price drops. He's committing enough traders to the downside. Then you see this little spiky behavior. Look at the pins to the low. And this is on the 4-hour time frame. I'm going to bring it down to the 1-hour time frame so you can see it clearly. Look at the pins to the low. Stopping volume 1. 2, stopping volume there. 3, 4 pins to the low, ladies and gentlemen. Then shift out of the zone. Okay? Shifting out of the zone. Are we understanding that? Do you get the levels? Yeah? Texas, what's good? Bitcoin is just starting. I agree. We're in the adoptive phases, ladies and gentlemen. But do you get now with the idea of the cycles? Okay, I'm going to go into it a little bit more. But are we on the same wavelength as such? For anybody new to the channel, if it sounds crazy to you, don't worry. You'll start to get it. We've got a lot of people from the States, man. Houston, Texas, what's good? Okay, then. I'm level 1. Bad. Okay, Bitcoin is going to tank to 25k before September. Well, we'll ride the moves up and down. No problem. Okay, cool. So that we understand where we are in the chart, okay? There is another pool of liquidity for Bitcoin to take out. Mark it off on your charts. Be mindful of it. That takes us towards the 40k zone. Okay? Now, before we get to that point, we might see price make a rise and a retrace. But that is the next point of interest for the market makers to send price back up to. Okay? Once it gets to that point, if it does pull back aggressively, it will bounce back down towards the 50 EMA. Okay? But if it's consistent with this move of this W formation down here, okay? See, let me get rid of this because we've hit that projection point. If it comes back, this is what may actually happen. And this is good for you guys to do as well. We've got the W formation. Price is either going to come back up. It's either going to retrace back down to the 50 and then bounce away back up again. Okay? Because its move is a little bit extended. Now, let's assume that it doesn't do that. Let's assume it does the following. Let's say it goes all the way up here, then comes back down. which then gives the 200 EMA, the 50 EMA, a chance to align themselves and start trading upwards, so that when price does come back down, it hits the 200 and the 50 EMA. Well, first it will hit the 50 EMA, okay? And from that point, it will then start to make a move to the upside, which will then take us to the next pool up here. Now, nothing is set until Bitcoin breaks the 42.50 mark. That's what it needs to do. Until it breaks the 42.50 mark, there are no cigars just yet, ladies and gentlemen, okay? So right now we're trying to establish what the market maker's going to do next. There's a pool of liquidity right there for them to take. There is no reason why they won't take it yet, okay? It's going to be a matter of when, okay? Let's talk about Ethereum. Ah, Lady Ethereum. Now, Ethereum has violated the downward cycle, all right? She has broken the cycle. Now there is a clear reset. Okay? Let me get that. What have I just done? There it is. I thought I just actually switched my computer off. How sad is that? Okay. Now that Ethereum has violated the pattern or the weekly cycle, okay? What happens next? Well, because she's come down and she's taken out this zone, okay, we are now potentially going to be looking for a retrace back down. Now, of course, tomorrow is the upgrade. How is that going to be welcomed? All right. Is this the move to the upside for them to get ready for this upgrade and then price drops and then comes back up? Are they going to quickly tank price, get Ethereum at the lowest point that they can so that they can bring it back up again? Got to be careful with tomorrow, ladies and gentlemen. You've got to be careful because it could be good. It could be bad. Who knows? Buy rumor, sell the news. Oh, yeah. There's that as well. Yes, ladies and gentlemen, I know. Sometimes I do boomer moments. I get it, man. It can be funny, but you know what? For me, it's frustrating, man, because I don't purposely try and mess my things up, man. I really don't do it on purpose. I try and do these streams with like the utmost professionalism and make it look like I know what I'm doing with my streaming software and whatnot, when really I don't have a clue. You know? I really don't. But that's it. That's what it is for me. But anyway, all right? It's all good. Let's discuss this. So, Ethereum has broken above the previous consolidation area or the high, which we saw as the M pattern, okay? Here's the proof right now that I've been talking about from earlier on when I said to you, if you go back in the streams, you'll always see an M formation happen and then a W formation appears, okay? And then it continues back up again. So this W formation that has formed effectively resets the whole cycle, all right? Now, based on this move to the upside, okay? With the looming news about this upgrade, they may just trail price further and further and further up, okay? 3,000 is in sight. The last time we were all looking at Ethereum when it was heading towards 3,000, we went on to earn, well, Ethereum went on to gain nearly $5,000 a coin. Is this where we are, ladies and gentlemen? Because if Ethereum does do that behavior, all right, she'll be using the 13 EMA as what we use the 50 EMA as a support. She'll just keep going and going and going. All right. Now, granted, this W formation that has formed on Ethereum right here, although it is small, okay, it's powerful. Look at it. Look closely. Stopping volume candle right there. Stopping volume right there. And sort of stopping volume. But it's a notable candle. Pin 1, 2, 3, 4, 5 pins to the low. They've been working that zone today. They are ready to move price higher. That's why they moved out so aggressively. Okay? And didn't stop. Look at the US Brinks box. Yeah? This candle went up and down. Stop hunt rise, drop. Stop hunt low, drop, rise. Okay? Two vector candles in the New York Brinks box. Completely threw everybody off. What way was it going to go? Is it going to go up? Is it going to go down? Hit the orders, and then they found direction. Now, 5 EMA is pointing upwards. 13 EMA is pointing upwards. If we do get a bit of a retrace, we may get the retrace back down to the 50 EMA, which they will then look to recover 50% of all these vector candles. So they may bring price back down towards this zone right here, which is the 2,500, 600 mark. Okay? In and around this zone. Okay? Now, if they do that, they should move price higher from that point, and we would then have a new cyclical move to the upside. Okay? So we might get this pattern. Retrace down, continuation back up. All right? That's where we are with Ethereum right now. Okay? New pattern, new cycle. Let's see what they do next. All right? Okay then. Cool. Right. Yeah, 20 billion pins to the low. Yo, Sam, is that you, fat? Bro, this guy, people think I'm Sam. Are you serious? That Forex guy, Sam. Nah, man. Okay. Now, aren't the upper Bitcoin vector candles already recovery candles? I'll get to questions in a second, bro. Hold on. Did the 50 EMA just cross the 200 in the 1 hour? Probably did. Well, on Bitcoin, let me just quickly look, because I'm going to look at some altcoins. Yeah, there you go. 50 EMA has crossed over on the 1 hour time frame on the 200 EMA. See, look, there's my point. Not to call you out, Thad, but this is the whole point, right? Thad has just realized that the 50 has just crossed over the 200 EMA. How many thousands of traders have seen that and now have taken trades on the basis that we are now looking at a potential golden cross? Okay? Imagine how much liquidity is coming into the market right now purely on that purpose. All right? What better time for them to retrace to hit the stops for the guys who have been going long? What better time? All right? If they do bring price back down, they'll bring it down towards where the 5 and the 13 EMA are. And earlier on today in the stream at 2 p.m. when we had the stream, we said that we needed to see the 13 EMA cross over the 50 EMA for us to deem that momentum is moving higher. Please go and watch today's stream. It's only on for about 35-40 minutes, I think it is. And it's literally in the first few moments where we talk about the importance of the 13 EMA crossing over for us to establish the direction of price. All right? Now, let's have a conversation about what has been busy across the board. Okay, so altcoins, Alpha, 13%, bruv. All right? 13% rise to the upside. What on earth has been going on with Alpha? All right? So, let's look. Taking out previous pools of liquidity. Looks like it. Beautiful. Now doing exactly what Ethereum has done. Look. Notable volume to the lows. Pins. 1, 2. Yeah, sort of 3 there. 3 pins to the low. Shift out of the zone. Notable volume coming in just below the 50 EMA confirmation. Moves out of the zone. Happy days. All right. 1 inch. I'm seeing 1 inch and Alpha just holding the top spots. Uni has been moving well. Dot's been doing well. It's been a great day. Absolutely great day. 1 inch pulling back. Now this is important, guys. When everything is rising across the board, okay, look for the coin that is pulling back first. All right? Look for the coin that pulls back first. Why? Because it's only going to cause a ripple effect across the board. All right? Remember, the big three can't really move price too fast. They can't pull liquidity too fast. All right? So they start to do it everywhere else. Now, usually there's this thing in the stocks and shares, right? And that was one of those another 64 thing that was. In stocks and shares, they have this thing called especially on Investors Business Daily. All right, because I was watching Investors Business Daily for a long time, and it was when they just came out as a website, and I sat through all of their upgrades on their website, man. Their website just developed and developed, and they sent me out this chart which had the Nasdaq, the Dow Jones, and New York Stock Exchange all listed on this massive chart, and it was 100 years of the market cycles. Okay. And it started off in the 1900s, and then it just went all the way. You just saw all the cycles from when the Republicans were in charge, when the Democrats were in charge, and it just showed you what was going on this chart, okay? And it was showing you the economic expansions, and there was this pattern that showed you that every time the US had a certain number of months of economic expansion, you saw a contraction in price, and it would pull back down, which was labeled as a bearish market or a financial crash, and then things start to go back up again. All right. So before the 2007, 2008 subprime mortgage crisis that happened in the US, right, had been on a 284-month economic expansion. They needed to crash the market. All right. It needed to pull back. Too much money was made. They needed to reset it. Everything was high priced. They needed to bring it back down again. All right. And when I was on that Investors Business Daily, I came up with this thing. They were talking about industry leaders. All right. And they would say that when the bigger stocks were moving, everything else would follow. All right. But as times have moved on, especially cryptocurrency, right, and then you've got the element of fractional disparity in Forex, you tend to find that the currency pairs or the coins in relation to crypto, the ones that don't have that much liquidity traded on, tend to be the ones that pull back first, and then everything else pulls back. So in other words, they pull their money out of the lightly traded coins, and then the bigger coins start to see the pullback as well. All right. So it's something for you to keep in mind. You know, it's something for you to keep in mind about how it all works. Okay. So that's 1 inch. Uni. Uni's moving, man. Uni is rising nicely. So she's moving up higher. So she's mimicking Ethereum. What's Dot doing? Because we paid attention to Dot. Dot's pulling back. Not really seeing movement there. Sushi. She's coming up. I'm not too keen on that. Elrond. Stalling. Atom. Atom's doing okay. Tron. Oh, Tron's made a nice move up. Really good move up. What's Ethereum doing again? Ethereum is starting to continue its move back up. Ava. Oh, wow. Ava's doing nice. Nice move. Sol. I'm not even going to say it. Solano, isn't it? Or Solano. Solano. Yeah, Solano or Solano. Anyway, I don't care. I don't care. I get it wrong every time. Look at what Sol's done. Recovery of the red vector candle. How many of you remember me talking about that? We said that she'd do it. We looked at it earlier on today, ladies and gentlemen. She hit that zone. Happy days. Anyone take that trade? All right, then, looking at other coins. Give me your coins, man. What? Solana, that's it. What coins? I mean, on my watch list. I'm going by what is actually moving. XRP has done pretty well today. 73, nice. Come back to the recovery of the vector candle. She's got another pool of liquidity right here. So that should be an interesting point over there. 76. Go easy, go easy, go easy. You send everything crazy. BNB. Let's actually look at BNB right there. 3% up for BNB. 335. Nice. Okay. She's done well. Dogecoin. Oh, God. We can't dismiss it, but it's still there. W formation on Doge. Interesting. What else is there? Let me have a look. ADA. Let's have a look at ADA. Is she up on the scene? There she is. ADA USDT. ADA's doing okay. She actually done a nice little pattern there. You can see rise, retrace, continuation up. All right. ADA Bitcoin. So she's pulling back down as well. So there could be 2 points in the chart that Ada may go to. She may even pull back down towards this area right here. And then she'll retrace back up, find weakness at the 50, and then drop down to recover this full area here. She's got 3 zones right here, ladies and gentlemen. There are 3 zones for Ada right there. Whether she takes them or not is a different story. That means that Bitcoin will probably look to break up, well, continue higher. But let's see what we have in store for them. In store for that. Okay, then. Where are we at? Let me have a look at your discussion. Cake. Where's Cake? I know I've got Cake up here. Here we go. Cake. 17. Hello, Cake. Cake. What a funny coin. Right. Where's Cake going? All right. We need to look at where it's going first. Okay. Interesting. If we look closer to Cake, we can see that she's actually taking out 1764. She's currently at this next pool of liquidity. Look, 1761 is where she's at, and she's sat right now at this pool of liquidity right here. She's brought it straight back up. We should see a bit of a retrace, and then she's going to start working the next zone of $18.9 per coin. And then we've got the next point up here, which is the $20 mark. And then after that, I mean, obviously the bigger drop, you can see that we've got some massive pool of liquidity right here, the 26 zone. Boy, it's going to be an interesting time for cryptocurrency. If this is the recovery that we are expecting, ladies and gentlemen, it's going to be a bloody good time for cryptocurrency. I'll tell you that. All right. All right, then. What else have we got here? Questions. Who wants to ask some questions? Luna being cheeky. Is Luna being cheeky? Is Luna up on here or not? Let me bring Luna up, because Luna's been, you know, a lot of people have been rolling out on Luna quite a bit. Let's have a look. Luna. Let's have a look. What are you saying, Luna? Whoa, 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 whoa. Okay, this is what the fuss is all about, yeah? Oh, hello. Hello, Luna. Welcome to Projection City. 1, 2. Oh, lovely. Oh, that was ages ago. Ah, no way. She come back up to it. Ah, no way. She did it. What stream was it that we spoke about? This previous pool of liquidity. Oh, what was it? Oh, man. Did anybody watch that stream? Did anybody watch that stream that we did where we spoke about the altcoins? I can't believe it, man. I cannot believe she actually came back. Wow, 2 days ago was it? No way. She came back. See, there you go, ladies and gentlemen. Look, this is what I'm saying about pools of liquidity. For them to get price down, all right, someone had to be there to sell. All right? And for someone to sell, someone has to buy. You can't have it any other way. There will be no market if that wasn't the case. Okay? The market maker does 2 things. He makes and he takes. The idea of the game is to determine which direction the market maker is making or taking. And he does one of 2 things. He does a markup phase or a markdown phase. Right now, ladies and gentlemen, we are in the midst of a markup phase. They've been marking their price down, and now we're in the markup phase. All right, that's where we are. All right, do you think, Delta Swish, do you think Bitcoin will have another retracement before making its way to the liquidity pool above? Let's have a look. Man, I thought I stopped I haven't stopped using MT4. I thought I'd start using TradingView because people say it's much clearer, but looking in retrospect, it doesn't actually look any different, bruv. Man, I need to sort this out. But this is what projection's about, ladies and gentlemen. This is what we're looking for. Okay? As much as you can have a clean chart, these annotation tools help you visualize the journey that the market maker may take. These help you understand probabilities, okay? The likeliness of price coming up to this point. So if you don't actually have drawings on your chart, okay, in your mind, you'll be saying something to yourself and there won't be no structure, because if it is all empty, you see price rising and rising, then you start going into retail trader mode and think, okay, it can't stop rising, I'm going to go long. And if you haven't drawn out pools of liquidity on your chart, if you haven't drawn out a formation of a pattern where it's likely to start and finish. Now, don't get me wrong. These pattern rises up. It may not come back to the liquidity pool now. It may come back later on. So if price drops now, hits the 50, comes back up, well, then it would have been consistent with this rise up, because if it hits the liquidity pool, it will then pull back again and then make another move to the upside. This is just to give your mind structure on what potentially could happen in the charts. That's what we need to understand. All right. How many of you are new to this channel? Have just passed through this evening. How many of you are new to the channel? Type 1. Is that what they do? Steve-O, Greg, please, bruv. Gentlemen, don't tell me you're new to the channel, man. Okay then, if you are new, thank you very much for passing through to the channel. I'm going to tell you a little story and helping you understand the concept that is discussed right now. All right, some of you may or may not know this story, but it's good to remind yourself about how the game works. And once I tell you this story, this is going to help lead you into the final elements of the of tonight's stream, and I'll let you guys be. All right. Of course, you came for the jumpers, Gabriel. All right. So here we go. How many of the new guys believe when price is rising, it's because the buyers are in control? Please be honest. And members, pattern watchers, keep your mouth shut. Don't say a word. We need to help people understand this. How many of you believe price rises and the buyers are in control when it does? How many of you believe that? Market signal to also break out the volatility band. Yes, Dynamis, listen, yes it is. It is normal. That just means crazy volatility. Okay. All right then, cool. So some people believe that when price is rising, it means the buyers are in control. By that token, you guys believe that when price is dropping, it means that the sellers are in control. Yeah? Well, we're wrong. The reason being is because in order for someone to buy, someone has to sell. You can't go into a shop that is empty and demand to buy everything if the guy on the counter says he has nothing to sell to you. No transaction can happen. Let's take the man with no. Let's talk about supply and demand. I kind of messed up the story. Shoot. I'll tell you what, I'll save the story for tomorrow night, ladies and gentlemen. I'm burnt out. All right. I've streamed twice today. I've been helping out the patrons in the morning as well. We had a great stage chat. I'll leave that story for tomorrow. All right. Let's just have a look at something. Bitcoin is actually moving up. Okay. Ethereum is actually moving as well. Let's just quickly look at that. Ethereum is actually going higher now, guys. M5 pivot point is in sight. 2,750 is where things may start to change, because it's the quarter number. All right, we've got the whole numbers, we've got the half numbers, and we've got the quarter numbers as well. 2,750 may be a point where they spike above it and then bring price back down again. Okay. Alternatively, they may just break for the 2,900, potentially 3 in this session, given with what is happening tomorrow. Please, ladies and gentlemen, if you're going to be quick with your trades, be my guest, but just make sure that you're careful. You are trading now into volatility. Now, volatility is a good thing, but also just be mindful. All right, this new fork, this new upgrade that's happening. All right, There's one or two things that can happen. They can favor it, it drops and then goes up again, or they can favor it, it rises and then drops. So just be careful. Market makers like to use news as a means to move price from one zone to the next. Just please proceed with caution. All right? Taylor, you saw right. Bulls and bears. Look, the bulls and bears story, okay? Listen, bullish and bearish concepts themselves. They are emotional words, okay? Let me tell you how it works. During news announcements, the market makers program algorithms, okay, to fulfill orders, all right? Now, these algorithms function on keywords that are released during news announcements, especially like on the FOMC. Now, I'm making it in relation to Forex, okay? Now, when you've got news announcements like employment changes or the CPI, non-farm payrolls, okay? As the news hits, the algorithms pick up the key words. For example, they look for positive words, you know, up 10, up 50, above forecasts. The second that word is released, whether it's spoken or anything else, the algorithm triggers and then it sends price in the direction that they're anticipating it going for. All right. What you've got to understand is bullish sentiment, bearish sentiment. Bullish means buy, bearish means sell. Okay? But this has been going on for for hundreds of years in the game of stocks and shares, man. But back then, they did have tangible stock. You know, you could buy and sell. Okay? But as time has progressed, technology has made it where, because they're dealing with so much liquidity, they have to make people believe that when price is rising, the buyers are in control. But it's old ways of thinking. We're in a digital age right now, and we're dealing with too much money, which is why the market maker's business model is not designed for you guys to make money. That's the hard truth about it. You know? I ain't saying 64 ever again. I hope it's just 65. I ain't ever saying that. You know? Market makers are in control, ladies and gentlemen. All right? You can have thousands and thousands and thousands of traders coming to the chart. However, before they can put their money in the market maker has to be there to fulfill it. He has an obligation. Okay? And that is how it works, ladies and gentlemen. All right? What's Bitcoin doing? About to break through the 40K. Here you go. Here's something for you. This is what we need to see. If Bitcoin breaks through the 40K zone, you want to see it break a notable volume. You want to see strong candles breaking through. That will solidify that they do favor higher prices and that they're triggering orders in and around this zone right here and moving up towards the next pool of liquidity. All right? We may just get that happening right now, ladies and gentlemen. Drop down to the lower time frames and you'll see it clear as day. Here we go. We may just get it near the 40K zone. If they don't break in with strong volume, I will not be happy. Because they may come above the M4 projection and move back down and then go back up. High ADR for the session is there. Let me bring up the chart on MT4. Make it clear as day for you. Here we go. We are trading above the daily open. We've confirmed the M1 pivot point, which implies the M3 projection. All right, so now I'm expecting Bitcoin to maybe pull back to the M2 pivot and then come towards the M4 projection, which sits at around the liquidity pool of 40,986. That would be an ideal scenario. So this is how you trade effectively the pivot points. Once a pivot point expansion has been achieved, wait for the next pivot point. So it's either the pivot point itself, which is there, as you can see the yellow. It either comes back down to the pivot point, continues back up to the next pivot point, or it actually comes down to the M zone, which is the M2 pivot, and then makes the bounce back up towards the higher M pivot point. Okay? This is what projection is all about, ladies and gentlemen. Building scenarios based on the information that you've got right now. Because this is the thing about this channel. We operate in real time. We don't talk hindsight. We look back in time and we say, where are the previous pools of liquidity? How can we understand the market makers' behavior at one point to the next? And then we look at the real time of price. And then we say to ourselves, what are the chances of it continuing from one point to the next? Draw out your patterns. Look at your confluences. Where's your moving average? X, Y, and Z. Man, I didn't even take a breath during that. What is going on? I haven't even vaped, man. I haven't even vaped. XRP. XRP projection. Here you are. For my XRP gang. XRP is trailing towards its psychological low. It really needs to try and close above that for us to really deem a valid move higher. That's what we need to see XRP do. It needs to come back into this range. All right. Let me just look at the liquidity chart that we've got for Bitcoin. Where are we at with the liquidity pools? There's the next liquidity pool. Here we go. I think 40 is just about to get hit. Is it about? There you go, ladies and gentlemen. Here we go. Look at this. Look at this. You want to see the 40k zone break out clean with a notable vector candle. Come on, Bitcoin. Give me that vector candle. Where is it? Is it there? Not yet. Just about to hit the 40. Once it breaks the 40, we'll see a... Ah, man. We'll see a bit of activity. It needs to break that 40 zone. Come on. Come on. We need a chill 72-hour stream to have a nice talk. Yes, I agree. I do agree. All right, then. I think I'm going to leave you guys to it. All right? I'm going to let you guys go and enjoy your evening. Keep an eye out on the charts. But I hope tonight we've actually managed to get some information into your minds and help you understand the cycles. All right? If you are new to the channel, make sure to like and subscribe. I want to thank you for being here. I hope all of you have a wonderful evening. Okay? And last but not least, welcome to the Traders Reality Channel. I'm Tino. Have a wonderful evening. Take care of yourselves, guys. Mad love and respect to all of you. Peace.